Good morning, welcome to Goodwill. In this video presentation we will see how we can trade in Nifty index options and futures. First let us see where the market is, the index futures is going to open. For that we need to look into the Singapore exchange price. The chart you are seeing is the 7-minute candlestick chart for the Singapore exchange price, and now the market is trading somewhere near 11,142. The time is around 8 o'clock now, so we have one hour for 15 minutes remaining for the market to open. So we are recording this video quite earlier, so there may be some minor changes. So what happened, our market open closed somewhere near 11,120, and the price is likely to open near 11,142. So with this information, let us go and see whether our Nifty can open. So Nifty, yesterday, this is the chart, and you could see we had drawn a few trend lines, and we are following that. Today I had added a new trend line by connecting this low and the yesterday's low. So I had projected that, nothing new. All the trend lines are old trend lines, and you could see the yesterday's market, after the opening it went up and found, so finally it came and tested this trend line and it went up. So you should understand the importance of trend lines. All these lines are projected, until the end of this contract we will be following all these trend lines, and we will update now and then. So today it's expected to open somewhere near 11,140 in all sense within this 1 hour. It can open more or less 10 points above or below that. So what we can do today also, you can expect the market to stay on the bullish side, and you should note today is the options weekly expiry also. So we need to plan it well. So what you can do, wait for the price to come and test this trend line, the blue line, or for entry. So the price can come and test this trend line. So you have various supports. One is this trend, this blue line, and 1060. So finally this trend line, but we think that if the price is it does not make sense that if you can go for buying till 11,020 or placing stop loss below that. So within this particular zone of 11,060 you can go for buying by placing stop at 11,050 or near the yesterday's low, expecting the market to move up since it is supported with various supports and trend lines. So wait for the price to approach the trend lines and various support lines, then go for buying, expecting the market to move up. So how we are going to put that in the options market? So it's we have expiry also today. First let us go and see what we can do in the, since 11,050 more or less the price is expected to open within the zone. This will be the at the money options. So what you can do, we can today, since it is an expiry, try to focus on 11,000 strike put option. So we can be a seller of put option. So since you are a seller of option, see, if you sell put option, the expectation is moving up, and also since you are selling option on the expiry, so time decay can help you drastically. So now we need to go and see the what's the chart. Okay, this is the closing around 18.35, but the LTP was around 15. So probably or every chance you will get the price somewhere around 10. Okay, so if you can sell this put option with a 10-point stop, okay, not more than that, 10-point stop. So there are a lot of chances that you will get at least 5 points or maybe more than that. So how we are coming to this conclusion? Okay, so in order for the price to come from here to 11,000 and close below this, as I said, we have lot of support lines. So it may be very difficult for the price to right after the opening straight away crack down and to come and close directly below 11,000. If at all, if it is happening, it should happen with a lot of time decay. Okay, it cannot happen right away. So I feel that 11,000 strike for today as a seller of put option should have a great advantage. So you can do this, or so if you don't want to participate in this, you can very well leave that and go to the go directly to the next contract. which is going to expire the next 30th of this month, the market final and the monthly expiry. So here 11,150, the options is around here. You can do 11,250. Select 11,250. The market closed at 77.90. Wait for the price to come near 66 or near 60 to 65. Within that range, go for buying by placing stop at 40, expecting the price to move up. In all the sense, this may be why we want to do it. We want to, because right after the opening, the market, there will be some sort of what you can say, the market will be opening around 80s or something. You can buy that strike right away if you can withhold the stop loss. If the price is going to come and correct these two blue lines, it means that it will be losing some 10 points, okay, 10 or 15 points, but within 66 or 70s it will be trading. If it can come and hit 11,060, you will be, obviously you will be getting that 60. So from 60, if you place 10 point stop, it goes below 11,000. So in all sense, we thought we think that the price can move from this range and it can pull back. So everything, all the strategy is based on the buying side. So today we expect Nifty index to stay on the buying side, at least. And you should notice yesterday, the one thing you should notice is 11,200. Right after the opening, it went and tested 11,200, and that gave you a lot of pressure. So that pushed the price down immediately. If you go back and recap and see the price opening, the yesterday's price opening, you will be amazed that, because as we had mentioned earlier, 11,200, most of the people would have sold the options here, the expiry. So it acts as a resistance to push the price down. Maybe a seller of call option pushing so many calls sold at this level. So you should think in that way also. So let us see what's going to happen during the trading session. But still, we feel that the market, at least from here, it can go and test it properly, 11,200, and then we need to think if there is continuous closing below 11,960. Depends upon the price action, we will take the other side. Thanks a lot for watching our videos. Happy trading. Take care. Bye.